Hello traders and investors, welcome back to the Trend Trader channel. So today I just want to give you an update on the 10,000 Rand stock trading challenge that we initiated in July 2021. We made a video saying that we'll be trading 10,000 Rand of our capital. We did this trade on EasyEquities, so it's not leveraged positions. So we just buy stocks, we pay the full price for a particular stock. So today I just want to give you an update. 6 months have passed, we are now in 2022. So the market closed yesterday. So now we had a chance to go back to review our trades. So we're just going to be talking about the performance. We're not going to be showing you the charts of the stocks that we traded, but the performance. These are the actual results. We record everything in spreadsheet. We'll show you some of the trades, and also we'll show you charts. Well, by chart I mean the price or the portfolio amount, the value of the portfolio, how it performed, and also we'll show you some metrics that we record that we use to assess whether the strategy it works or it does not work. Like we said at the time when we were making that video in July, we said that if you want to follow a similar strategy, you can go to Gumroad and buy an ebook. The name of the ebook is Systematic Trend Following. The link to that ebook is in the description below. The book is selling at $25 US. So it's for people who understand the value of money. We don't expect anyone to be interested in it. It's for those that really understand the value of money. So that's what this video is going to be about. So it's an update of the challenge that we did last year, the 10,000 Rand challenge, and then also in the video we'll tell you what will be or what are we planning to do for the year 2022. For 2022 we have a different plan, right? The plan for 2022 is to up the stake a bit. We're increasing the value of the challenge from 10,000 Rand to 27,000 Rand, right? So that's what we are going to be trading this year. Last year we traded 10,000 Rand. We just wanted to test the system. Now we are happy with the numbers. So the plan for 2022 is to trade 27,000 Rand. It's not a lot of money, it's just the amount of money that we have and that we are willing to share publicly in the YouTube channel. So if you want to follow us as we take on that challenge, you can subscribe to the YouTube channel so that every time we post videos about the challenge, you can always be in the loop with what is happening. And also we do post sometimes, not all the time, we do post some updates in the community tab. So if you go to our channel, you go to community tab, you will see that we used to post either charts when we close certain trades and all those kinds of things. And for those people that will buy the ebook, whether they buy the dividend manifesto, which is the ebook that we use to trade dividend paying stocks, or the people that are going to buy the Systematic Trend Following ebook, each book costs $25. Those people that will buy that ebook will be added in an emailing list. Each and every week we share trade ideas that we send to those people that bought the ebooks. So basically, if you do support our efforts, we also ensure that you get a full value for your money, because it's important to us that you get back the amount of money that you spent, right? So maybe that's an incentive that will encourage you to buy the ebook, that at least each and every week you'll be receiving an email from us detailing what we're planning to trade for that particular week. So I think it's a win-win situation for us and for the people that will buy the ebook, right? So the approach that we use there, it's a semi-short, it's a mixture of short-term and long-term trades, more like swing trading. The trade can last as short as a day, but it can also last as long as a couple of months. We have some positions that we bought a few months back. So basically there we have a fixed take profit and the stop loss. If the stop loss is hit, we exit. If the take profit is hit, we exit. We don't know which one is going to be hit first. We don't know how long it's going to take for each either the stop loss or the take profit is going to be hit. That is why we are saying that it's not a short term, it's not a long term thing. It just exists between the stop level and the take profit level. But again, if you want to know more about the approach, you'll find it in the systematic trend following ebook. Like we said, the link is there in the description below. And if you don't want to miss any update from this challenge, make sure that you subscribe to the channel if you haven't subscribed yet. If you have subscribed, make sure that you also click the bell notification so that you can be notified every time we post a video in the YouTube channel. So now let's go to the spreadsheet and go to those charts. And go to that data that we collected while we were trading. Okay, as we mentioned, the ebook, you'll find it there on Gumroad. Don't worry about the link. The link is in the description below. You will find it there. So this is just what the book is talking about. We're using systematic trend following. It's a bull and bear approach that is based on technical analysis. We mentioned that the book is going to cost you $25. What you're going to get when you buy the book, you are going to get a 19-page ebook that talks about the strategy. It's available in two formats. It's a PDF and an EPUB format. Then we have a risk management Excel worksheet that we use to calculate our stop loss. Then there are 3 videos that explains the strategy there and how to set up the chart and how to use the Excel worksheet. And then also we'll provide a lifetime email support. Well, for as long as we are alive, we'll be able to provide you with that email support. So whenever you're experiencing challenges, you can send us an email, then we'll be able to attend to your questions. And then, yeah, so everything is explained here, what to expect from that strategy. We also have some images there that show some of the positions that we took in the past, the positions that have worked, and some of the swing trades that we took there in different securities, and a brief overview or performance of the trades that we took there in the past. So that's it. That's everything that you can find there in the systematic trend following ebook. It's just going to set you back $25. You have options. You can rent it for $15, although we recommend that you buy it so that you can watch it as many times as you want, compared to a 30 days rental period. So that's it about the ebook. So now let's go to the order of the day. So these trades that we're looking at now in our screen are all the closed positions. We're just going to be talking about closed position initially, then we can talk about some of the positions that are still open, right? So now when you see here, we talk about 13 trade from here, from Steinhoff all the way to Sasol. We talk about 13 trades. Like I said, all these trades are closed. So from these trades, we can see what I want you to focus more on is the return on investment, which is just how the share price differed from the entry price versus the current price, which was the closing price when you exited the security. So this is the exit price here. It should also match the current price. It's just that we are using Google to automatically update this column, but here it's the fixed column there. So what you can see here, the spread between the wins and losses, it differs a bit. Remember, we always talk about the R concept. Basically, the R concept is the risk to reward, right? So basically, if we take a minus 10% risk, that's going to be minus 1R. And if the share price move in our favor by 10%, positive 10%, that's going to give us a plus 1R. So instead of thinking the way we approach risk management, we approach it from how much can we lose from our capital, right? In this case, we are risking about 2% per position for most positions, but there are some positions where we made an exception. We had the 1% risk loss. We did that so that we can adjust for the amount of capital we had there in our trading portfolio, right? So as you can see, our main or our biggest loss was the first trade that we took on Steinhoff there. So we bought Steinhoff at about R1.96, and then we exited that position at R1.52. So in that position, we lost about 22%, or the share price dropped by about 22%, and that translated to an R multiple of -3. Ideally, we want the R multiple to be -1. So if the R is -1, that tells us that, okay, we were able to manage that trade perfectly and exited with the minimum loss amount that we had set to exit with, right? But what happened with Steinhoff, after we bought it, there was an announcement. Remember that Steinhoff still has some pending cases. Some cases are happening in South Africa. Some cases are happening in Europe. So there was an announcement regarding one of those cases, and then the share price, it just broke lower. That is why we lost 3 times of the normal risk that you would wanted to lose there. It happens. We don't really control what the market does, but like I say, always say, we always need to have a stop loss. The stop loss is not there as a guaranteed protection, but it can help to reduce the amount of money that you can lose in the market. So as a result, because we lost about -3R, we lost there about 600 Rand from that position alone. That was the first trade, one of the first trades that we took, and that trade made us to lose 3 times the amount of money. If we just lost a -1R, we're going to lose about 200 Rand of that 10,000. Remember, 200 Rand is 2% of 10,000 Rand. So yeah, I think what we learned from this trade, or this trade just opened our eyes that, okay, we need to be careful with the kinds of trades that we are taking. For example, we should have avoided trading Steinhoff, not because Steinhoff is a bad company, but because it was still involved in some it had some legal issues, right? And also well, you don't want to say that you don't trade penny stocks, but it's important that we try to avoid shares that are trading below 1 Rand. Okay, but with Steinhoff in particular, we need to try and avoid companies that are involved in legal issues. Okay, so that was an eye-opener for us, and it helped us to pay more attention to the trades that we are taking. Okay, so in this instance, Steinhoff was our biggest loss. There we gave the market about 651 Rand. In total, we had about 1,400 shares there, or just about 1,480 shares, but the shares were just trading at about R1.52. So that is why we were able to have a large number of shares there. Then now, if we look at our best performing stock, we had Aspen there. If you look at this row 9, we exited Aspen for 45% gain, which translated to an R multiple of 5.66. In this case, we're talking about the top performing in terms of percentage amount. As you can see here, we had 45% or 45.13%, but that just only translated to about 5.66. And then if you look at the value that you got there, it's about 360 Rand. So it wasn't a much amount of money. The reason for that, as you can see, I highlighted Aspen twice. It was a long position, so we first sold a portion of that trade. When we reached about 26%, we took some profit there. We closed that trade, which gave us a profit of about 408. Then we left these 4 shares there to continue to trade. And then the market, I just want to see. So we exited at 268. The first trade we exited at 233, but the second trade we exited at 266. So the share price went up a bit. So now, because we had few shares compared to the large number of shares that we had closed earlier, that is why we didn't make a lot of money. But in total, this full position there gave us a total of about 800 Rand profit per share, which then averages to about an R multiple of 4. Again, it was a good trade. We don't determine a trade by the profitability or the loss. We determine a good trade by that we followed our plan, we managed risk, and then whether we took a profit or loss, it doesn't matter. What matters is that we're able to stick to a trading strategy. Okay, in terms of R, the trade that paid us the most, we had F.I.R.E Resources. We bought F.I.R.E Resources there. We took the position at 68 cents per share, and the first tranche of the F.I.R.E shares we exited at 95 cents per share. And that gave us about a 40% return, which translated to about 6.75 R. That gave us about 720 rand. So this was, in terms of rand value, that's the highest amount that we took in a single position, right? So we're happy with that number there, because this it did boost the value of our capital a bit. But then again, same with Aspen, we took this in different tranches. So the first tranche we exited at about 40% with about 700 rand per share. There we had about 2,600 shares. So in total, we had over 3,000 shares in F.I.R.E, because the second tranche we exited at 89 cents. So this one we sold at least at the top at about 95 cents. Then the share price retraced a bit. Then we exited at 89 cents, pocketing about 370 rands in that particular trade. So if you average, okay, if you add these two, we made about 1,000 rand profit from this trade alone, trade in F.I.R.E. And then in terms of R, it's about an average of 5.5 R. Again, we're happy with that particular trade. So we traded different companies. We had Steinhoff, which was our largest loss. We had F.I.R.E Resources, which was our highest profit in terms of R value. And then also we had Aspen Trade, which was the highest in terms of rent amount. Then we took some losses from City Lodge Hotels. This company, we still believe that it's a good company. It can have an opportunity to grow despite COVID. I mean, we saw with Omicron, when Omicron was announced, a lot of people panicked. Some sold their shares. Fortunately, we didn't sell some of our shares. But I mean, now we are living with COVID-19. We've accepted it. We've learned to live with it. Even the government has now removed the curfew. Okay, so another companies, the positions that we had enclosed, we had PPC, Mesmat, and then this bet is Brit, not British American Tobacco. British American Tobacco is BTI. But also here, even with BAT, we also managed to get some bit of money. We entered the trade at 3.41 cents per share, and then we exited at about 4.70 per share, pocketing about a 37% return, which translated to an R of about 5.77, giving us a profit of about 540 rand per share. Okay, and then here, this is one trade that at some point we were on profit. So this trade was badly managed, partly because it was not part of the 10,000 rand challenge. It was part of our long-term trading position. So when we decided to buy more of Distel Group shares, we were actually adding onto what was our existing long-term position. And then now Heineken was in the process of buying Distel Group, and then they made an announcement to say that Heineken is offering 165 rand per share. At the time, the share price, the previous Friday, the share price was above 185 rand per share. So on the Monday, when that announcement came, the share price just crashed, and then we took about minus 10% loss there, which translated to over minus 1.3 R, and then we lost about 137 rand per share. So the risk in this particular share was 1%. It was not 2%. If it was 2%, we were going to lose about 260 rand per share, right? As much as there's different kinds of risks in the market, we always say that the best thing that you can do in the market is to manage risk, not to run away from risk. So what happened here, we couldn't control the amount of offer that Heineken was going to offer Distel Group, and Distel is owned by Remgro. So Remgro, as the holding company, they agreed that they are happy to convert to convert their Distel shares to Heineken shares at that particular price. Maybe if Remgro demanded more than 165 rand per share, it's possible that the share price could have went up, but It's all in the past now. We took our loss and we moved forward, went on to continue to trade other shares. So we also have a transaction capital. There we didn't make a lot of money. As you can see, we only exited at about 0.5 R, which gave us half the risk, which was 100 Rand. So the risk that we were taking there was about 200 Rand per risk. And then lastly, we had Sasol. So we exited this position somewhere. Let me see. Okay, there's no date where we exited the position, but the enterprise, it says it's the 19th of November. So most likely this was a short-lived trade because November isn't that far from where we are today. But yeah, we also exited at about minus 1.44, again losing about 141 Rand per share. So for the important information that we use to assess the profitability of the approach, so we do keep or pay attention, we record this information so that we can determine the profitability of the strategy. So what we see here, we have the average gain in percentage form. So the average is for all the trades that were closed green. In this case, we have an average profitability of about 31%. And then the average loss there, it's here. So it's about 11%, which is calculated here. So we have a risk to reward of about 1:3. Well, it's not perfect, but it's a minus 11 and 31%. So that gives us a risk to reward of about 1:3. So we always talk about that win rate. Yes, it would be nice to have a win rate that is greater than 50%, but what is more important is the size of your wins compared to the size of your losses. So our losses are about 1 and our wins about 3 times the losses there. So for this particular instance, if we're only profitable for about 33%, then we can still make money. If we're just profitable by 33% with this win ratio. For those people that are more experienced about the trading metrics, they will easily understand this. But for those people that do not understand it, let me make a quick example so that you understand. So basically, let's say that on each and every trade, when we are wrong, we lose 10 Rand, right? So, and then when we're profitable, we make a 30 Rand. So like I said, we have about 33% win rate. Theoretically, that's the win rate that you should be looking for. So in this case, it means that 7 out of 10 trades are going to be losses. In that case, it means that we're going to lose 70 Rand potential, and 3 of the 10 trades are going to be profitable. And with each trade, we make about 30 Rand. In that case, 3 times 30 gives us 90. And then we net out about positive 20 Rands. So you see from this, we can tell that, okay, our approach has an edge. Over the long run, we are going to make money if we use this trading strategy. So that's what we talk about when we talk about the concept of R, because we need to understand our numbers. We need to know how much are we making if we are profitable. We need to know how much we are losing if we are losing. And we also need to have an idea of the win rate, which is just the ratio of the winning trades over the losing trades, right? So what do these numbers mean to us? I will just be touching them one by one. Okay, I've already explained the average gain and the average losses. It's just the averages of the wins and losses in terms of return on investment, right? Then we calculate the average gain in Rand terms. Remember, we're interested in money, so we need to translate these numbers into money. So you see here, our average gain is about 434 Rand, and then our average loss is about 264 Rand, meaning that if we make money, we are more likely to make about 400 Rand from that particular trade. But if we lose money, we are more likely to lose 264 Rand. Remember, these numbers are not coming from the sky. They are coming from the actual data, from the actual trades that we took there. So we cannot manipulate these figures so that they can tell a good story. Then in terms of R, it's the sum of all these R's that we see here in this column. including the positive and the negative figure. Well, Excel is smart, it can calculate the whole sum of the thing. So what we get here, we get a positive R of 26%. That tells us that the approach is somewhat profitable. If we had a negative R there, we would be worried, but it's an absolute figure there. And then again, like I said, we took 13 trades. So if we can calculate the expectancy. Expectancy just tells us what is more likely to happen in relationship to risk. So in this case, what it tells us that we just take this 26.2, we divide it by the number of trade. So we are looking for a positive figure. If we have a positive number, it tells us that the strategy is profitable. But if we have a negative number, then it will mean that the strategy is not profitable. So in this case, we get a ratio of about 2.01. That means that for every R1 that we risk to put in the market, we are more likely to get to make R2. You see, so basically we have a system that has almost a 50-50 success rate, but the risk to reward, then it becomes 1:2, because every time we risk R1, there's a possibility that we can lose R1, but if we're profitable, we have a chance of making R2 per share. Right, it's a lot of metrics there. You just need to choose a specific matrix, because the moment you start to combine them, then you start to get different things there. Okay, so now let's look here in the balance. So here, that's where we captured this information that we have here. It's coming from these trades that we took there. Just that we decided to pick specific columns so that you can see the result in a certain format. Remember, we started with 10,000 Rand, and then we traded, and then we see from the up until the last trade that we closed. So every time we make some money, it will be added. Every time we lose some money, it will be subtracted. And then here in our profit and loss, we highlighted the most amount of money that we lost there, and the most money that we made from a particular trade. Okay. And then we use this information to plot these charts there so that you can visualize what happened. But now, as you can see, the current balance from the closed position, it's about 12,152. And then if you look at this chart here, let me try to make it a bit bigger for the purpose of this video. So you see, this is what we have here is the balance of the portfolio in rands for all the closed trade. Like I said, we started at 10,000 Rand. We lost some money with that state of trade. So that is why we dropped our balance there to about 9.3. The second trade here, we also lost 230 Rand, which took us to about 9,100 Rand. And then the second trade was, the third trade was profitable. So now we started to come back to just about break even. For once we were above the starting balance, we're sitting at some cash there, but we gave a bit of that cash. And then the following trades just took us up there nicely. So we were able to grow the capital. So the closing balance is 12,152. So the profit that we made using this strategy over that 6 months period is 2,152, meaning that the strategy returned 21%, or we managed to grow our capital by 21%. So that's what this chart is telling us, right? So now I want us to look at a different chart so that you can get a different piece of information. So now this chart is telling us about the risk to reward that we're taking there. Remember, we touched a bit in terms of risk. So what we see on this chart is the number of trades and the risk that, or the R concept, or the R ratio. You see, the R is risk to reward. We spoke about Steinhoff, which was about minus 3.38, and the largest profit that we made there in terms of R, which was 6.75. Ideally, we want all our minus R to be kept at 1, but it happens sometimes we exceed it a bit by a few numbers, because that's because we don't control the outcome of the market. We can only control how much we are willing to lose. But even there, we are using EasyEquities. We don't have a stop loss function. We need to constantly monitor our positions so that if they reach a stop level, we exit those positions. Okay. So now, as you can see, we have about 5 trades that are underwater, and then we have the 8 trades that are above 0, meaning that these trades were profitable. So like we said, that the average is about 1:3 if we take the average of these two. So we are somewhat happy with this performance, because now we can tell that we have a chance to be profitable, and also we have a chance not to lose a lot of money. Then if you look at the return on equity for the number of trades, the return on equity is the amount of money that we made compared to the value of that portfolio, or how much the share price grew when we're holding that position. Again, with Stanov, that's where we lost a lot. We lost about 22% there. And then we had this trade where we made 45%. I think this was Aspen. And then with Merafe, we made about 39%. So as we can see, the ideal scenario is that we want to try not to lose more than 10% in terms of share price depreciation. Well, the sky is the limit. Minimum that we want on the upside, it's positive 30%, but we just get what the market gives us. So with these charts, we have an idea of what is happening in the market. We are always aware where we are. Then from this tab here, what you can see is the win rate here, or the win rate that you can calculate here. So the strategy has a win rate based on the 13 trades, not on all the trades that we have in the strategy. Based on the closed trades, we had a win rate of 61%. Remember, I said that if you have a risk to reward of 1:3, you need at least 33% for you to be profitable. So we sort of double that win rate here. So we are happy with that number. Here we can see the average gain of 434 and the average loss, and the large gain that we made there, and the large loss as well. And then the win-loss ratio is positive 1.64. Again, this tells us that the strategy has an edge, which has a positive expectancy. We expect to make money with that strategy there, as you can see. All right. Then here we have something that you call a Kelly formula. So Kelly formula is another thing that you can use to determine how much of our capital can we use to invest or to take trades. So basically, the Kelly formula is based on the strategy win rate and also the R average. So the R average is just the average of R for all the trades. Then from this, we can see that the Kelly formula, it gives us a figure of about 47%. That means that we can take 47% of our capital and put it in a single position. Well, that sounds like a lot of money, because if we have 100% capital, we put 47%, it means that at any time we can only have about 2 positions. So some people, they use adjusted Kelly ratio. So they either use half of that or any other certain percentage of the Kelly formula. So if we were to use half of that, then it will mean that we can deploy about 23% of our capital to a single trade. Or even if we want to use a quarter of that, it will mean that we can put around 10% or so, or just about 12.5% of our capital into any single trade and still be in the position that we can make money. Remember, what tells us if we have a chance to make money is determined by the win rate and also by the expectancy or the edge. So now we know that whenever we risk 1 rand, we have a chance to make 2 rands. Okay. So these are the trades that we closed in a nutshell. So basically, a quick summary: we managed to grow our 10,000 rand to about 2,100. So that was about 21% growth there. We have a risk to reward of about 1:3, and then our average loss is about 11%, and our average gain is somewhere around 30%. So at this moment, we are happy with these figures, and that is what is giving us confidence to say that for 2022, we are going to increase the stake there. We are going to trade 27,000 rand of our capital in swing trading. But now if we come here, we look at the other trades that are still open. Remember, here we have the trades that are already closed. Those are the trades that we use to talk about this information. But we have some positions that are still open. The market has just been trading. We were not going to stop trading after those 13 trades. Okay, so the last trade that we saw here was the Sasol trade that we closed. So let's see here. So this is where we were, the Sasol trade. So all the trades that above this level, okay, some companies are still open, like Remgro. We still have an open position there in Remgro. You can see that the position is up by 15%, and we have about in terms of R, about 3.5 R. So the way that the dynamic profit is just that it's going to keep on changing as the current share price is changing. You see the difference. For the closed position, we have a fixed figure there, but for the position that are open, we're still getting the current share price from Google Finance, and it updates automatically. And if you see here on invested capital, all the tabs that have, or the rows that have zeros, it's the closed positions, and then the other rows that have amount, it's positions that are still open. As you can see, we don't have an exit date on those, so they're still there. So we used different kinds of approach to trade. As you can see, the trade type, so we can just drop down depending on the approach that you use to take that particular position. Right, so of the positions that are still open, we have a position there on ShopRite, which most of the positions that are remaining are somewhat on profit, but anything is possible in the market. We don't want to conclude that they are going to be profitable trade, but we have a position on ShopRite, we have a position on South 32, we have a position on Thungela. We made a video when we were taking this position on Thungela, even though we didn't mention that it was part of the 10,000 Rand challenge, but we made a video to say that at that time we were buying Thungela and Sasol. As you can see, we bought this on the same date, the 24th of November. That's when we made that video. Of those two trades, Thungela has performed better than Sasol. And then the last position that we took was in ArcelorMittal. So there is a gentleman that we also communicate with. So we discussed this ArcelorMittal a bit with him. Then we took the position. So now we are still stuck with the position. He has already made his money and closed this position and went on to take other opportunities there. So yes, we do talk to other traders. It's important that we connect. If you want to trade alone, it can be a lonely road there. There are so many people that you can engage on social media about trading and investing, just to make sure that you don't make it a lonely road for yourself. So we don't operate in a vacuum. We do engage a lot of people, right? So if we calculate the sum of all R's that we see there, we get an R multiple of about 36%. I mean, of 36R, meaning that in terms of the risk, we got 36 times in profit in relative to that risk. But since some of the trades have a risk of 1% and some of the trades have a risk of 2%, we're not going to spend time going through each calculation to determine where we could have made money. But for the purpose of quick calculation, we can just take that 36R and multiply it with about, so we're going to say 36 multiplied by 150, which we can say it's the amount that we are most likely to risk, because we're just taking an average of the 2% risk and the 1% risk. So when we do that, we get a profit of about 5,400 Rand. In theory, with the open trades, if we were to close these positions that we have there, chances are we can return 54% profit compared to that 21% that we returned. But remember, this is just, we still have these positions. The market can still go down. We can still hit a stop loss. Nobody wants to count their chickens before they can hatch. But what we just want to show you is that the strategy can be profitable if you apply it with discipline. We made a video. We're just going to leave a link to that video where we said that for you to succeed in the market, you need to have an approach, which is the plan. And then in your plan, you need to incorporate a risk management, because you're going to lose money with some of the trades. Not all the trades are going to win. That's why we don't have a 100% win rate. And then you need to have that mindset to say that, okay, when you see an opportunity, you just act. You don't second guess that signal. If you get a buy signal, you buy. If your stop loss is hit, you don't want to end up wasting time thinking whether you should close that position or not. So you need to have strategy, risk management, and that mindset. So this, by capturing this information, that help us to understand where we are in terms of trading, because numbers don't lie. Unfortunately, we can lie to anyone, but the numbers will never lie to ourselves. So we need to know at any instance how are we performing. So yeah, that's it. That's the update for the 10,000 Rand challenge. We're not saying that the 10,000 Rand challenge has been closed. We just briefly talked about the positions that we closed, and then for 2022 we'll be adding more capital to that fund to take it to 27,000. So that is where we're going to be trading in 2022. Again, if you don't want to miss updates on that new 27,000 Rand challenge, just make sure that you subscribe and you hit the bell notification. And also, if you want to get the grip of what of how we are trading, you can go to Gumroad there and spare your $25 US buying this ebook. You already seen, like we said, the numbers, they don't lie there. So you can just see what is happening there, how this ebook can help you. So we're just going to wrap it up here. And then we hope to see you as you continue to trade. If you have any questions, comments, suggestions, even complaints, make sure that you leave them in the comment section. We'll attend to them. If you enjoyed this update on the 10,000 Rand stock trading challenge using EasyEquities, make sure that you like this video. We will see you in the next video. Basically, in the next video, then I'll be giving you an update of how overall I have performed in 2021 in my EasyEquities account. Then we'll also have another video. Remember, we started in Zan's Investor channel. We started talking about dividend investing. So I will give you an update on that dividend portfolio, which stocks we have there, how that portfolio has grown since we made the first video, and the dividends that we received in November and in December 2021. So make sure that you subscribe so that you don't miss all those updates that are coming. And also, we just published a video recently telling you about companies that can pay you dividends. So this is the video that we are talking about. If you go to videos, this is the video that we are talking about for dividend stocks to buy in the JSE using EasyEquities. And remember, we said that we leave some of the updates in the community tab. So that is where you're going to find these updates. We know we last updated 3 months ago. We're talking about an Aspen trade there. We're just giving an update where we were with that particular trade. So this was the trade there. As you can see, we had reached that full target of 250 Rand per share that we are targeting. So make sure that you do subscribe to the YouTube channel so that you don't miss all these updates. So that's it. I'm just going to wrap it up here. See you on the next video.